You'll find the link to daily Bitcoin price tracker sheet in the description and pinned in comments below. Most people lose money in crypto for one reason, and almost nobody realizes it until it's too late. They think they are smart, they think they are safe, but while they are watching prices, whales are watching them. And what these whales do next could wipe out your entire portfolio or make you richer than you ever imagined. In the next 60 minutes, you are going to learn how to track crypto whales like a pro, even if you are a complete beginner. The on-chain data secrets that institutions use to stay ahead, the exact mistakes that destroy beginner portfolios, and how to avoid them, and the one signal that tells you when a crash is coming before it happens. By the end, you will know exactly how to deal with crypto without getting crushed. But there's one thing almost nobody notices, and it's the reason most people still lose. If you want simple crypto education without the confusing jargon, subscribe now. We post videos every week that help beginners avoid expensive mistakes and spot the moves before the whales make them. What is a whale and why should you care? Imagine someone who can move the entire crypto market with a single click. That's a whale. In crypto, a whale is any wallet holding enough coins to move the market. Usually that means thousands or even millions of dollars in BTC, Ethereum, or altcoins. When a whale buys, prices rise. When they sell, prices crash. It's like a shark in the ocean. Everybody feels it before they see it. Think of the crypto market like a lake. Small fish are retail investors who swim around. But when the shark, the whale, moves, everyone else panics. Here's the scary part. Most retail investors don't even know whales exist until their portfolio drops 30% in a day. But how do you actually see these whales before they strike? That's where on-chain analysis comes in. And what I'm about to show you next. changes everything. On-chain analysis, the secret weapon institutions use. The blockchain is a public ledger, but almost nobody knows how to read it. On-chain analysis means studying blockchain data to understand what's really happening. Not price charts, not news, but real wallet movements. You can see how many coins are moving, where they are going, who's buying, and who's dumping. Institutions use this daily. Now you can too. Let's say 10,000 Bitcoin suddenly moves from exchanges to cold wallets. That's a whale accumulating. Price usually follows. That's the truth. Most beginners trade blind, while whales trade with a map. But here's where it gets dangerous. Because not all whales move are good. And the next section will show you how to spot the ones that destroy portfolios. The whale moves that crash markets. Some whale moves make you rich. Others wipe you out. When whales move coins from cold wallets to exchanges, that's usually a warning sign. They are preparing to sell. When they move from exchanges to cold storage, they are accumulating. That's bullish. In 2021, before Bitcoin crashed from $64,000 to $30,000, whale wallets moved over 20,000 BTC to exchanges in just 48 hours. People who saw it got out. Everyone else got crushed. If you don't watch this data, you are trading blindfolded in a minefield. So how do you actually track these moves yourself? I'm going to show you the exact tools and the one free method almost nobody uses. How to track whales yourself, step by step for beginners. You don't need to be a developer. You don't need to pay thousands. You just need to know where to look. The first step is use a blockchain explorer. Etherscan, Blockchain, Blockchair, or SolScan. The second step is search for large transactions, usually over $1 million. The third step is check if the wallet is an exchange or private. The fourth step is track movement, trends over time. For the first time, you have the same data as the big players. But here's the mistake 95% of beginners make when they start tracking whales, and it could cost them everything. The number one mistake beginners make with whale data. Most people see a whale move and immediately buy or sell. That's a trap. Whales sometimes fake moves. They'll move coins to exchanges, then stop. Or they'll dump a small amount to trigger panic, then buy lower. Context is everything. You need to track patterns, not single transactions. I watched a guy lose $15,000 in one day. He saw a whale move 500 Ethereum to an exchange and sold everything. Turns out it was a wash trade. The whale was just testing the market. One impulse decision and years of gains disappear. So how do you avoid this? There's a simple framework, and it's what separates winners from losers. The whale tracking framework, beginner friendly. This is the exact system I use, and it's killed 90% of my bad trades. The first step is confirm the trend. Are whales accumulating or distributing over weeks? The second step is check exchange flow. Inflows equal bearish, outflows equal bullish. The third step is look at volume. Is this a one-time move or consistent? The fourth step is wait for price confirmation. Don't front run whales. The fifth step is set risk management. Always use stop loss. Follow this and you will stop chasing whales and start riding them. But there's one more layer. The one signal that tells you a crash is coming before anyone else sees it. The crash signal almost nobody notices. This is the most valuable secret in this entire video. When whale wallets start moving large amounts to privacy coins or mixing services, that's a red flag. They are trying to hide. That usually happens right before major crashes. Before the 2022 crypto winter, whale activity on Privacy wallet spiked 300% in 2 weeks. People who saw it got out early. This is the kind of edge that separates the 1% from everyone else. You now have tools, the framework, and the signals. You are no longer prey, you are part of the hunt. Here's the hidden truth most gurus won't tell you. Whales don't win because they are smarter. They win because they see data before you do. And now you do too. You started this video wondering how to deal with crypto without losing everything. Now you know how to track whales, how to read on-chain data, how to avoid the mistakes that destroy portfolios, and how to spot crashes before they happen. This is the edge. Use it wisely. If you want to stay ahead in crypto without wasting years learning the hard way, subscribe now. Every week we break down complex crypto topics into simple actionable strategies so you can move with confidence, not fear. But before you invest in any coin, watch this next video here. We are analyzing the upcoming crypto sectors like AI coins, gaming tokens, and tokenized assets. And there's one sector that's about to explode, and almost nobody is talking about it yet. Click here and I'll see you there.